Welcome, everybody. 10 minutes is not a lot of time to go through all the slides, so we condensed it to the big news that just happened that we announced on October 27th, the acquisition of La Preciosa from Coeur. Avino's been around for over 50 years. We've got over 30 years of production under our belt, but let me get into it here. Going to be making some forward-looking statements, but so it's a primary silver producer, 36 years of production. 500 years ago it was discovered, so it's a mineral-rich area on a volcanic caldera, and a lot of opportunities for future expansions. And so getting into the big news, and so this is a creative, synergistic acquisition of La Preciosa, which repositions Avino amongst silver producers. Summary of the transaction. So on October 22nd, we announced the acquisition of La Preciosa. It's a development stage project with 135 million ounces of silver equivalent. This more than doubles our resources. The completion of this transaction is expected in Q1 because the Mexican Federal Economic Competition Commission has to rule on it. But since we've announced it in 2 weeks, the value of our company is up 20%. And we expect this to continue, and you'll see in the slides why we're so undervalued right now. The history of that project goes back to Orco mining, and Coeur paid $382 million to pick it up in 2013. We paid about 10% of that to pick it up, which is equivalent to 25 cents per ounce. They outbid First Majestic, and then in 2014 they came out with a feasibility study looking at a giant open pit mine at 10,000 tons per day, 11-year mine life, which just wouldn't fly under the metal prices at the time. And even today with the left-wing government, it still wouldn't fly. So it makes sense to merge the two assets because we're specialized in underground mining, and that's what we're looking to do is underground mine this. Here's the terms of the deal. So we issued 14 million shares, closing price 92 cents US, value consideration 12.9 million. The value of 7 million warrants is 1.8 million, and 15 million US in cash, and that is equivalent to 29.7 million in upfront consideration. So that's how you get to the 25 cent per ounce if you divide that by 135 million ounces of silver equivalent. Then we have a deferred cash payment that we'll pay in 12 months of 5 million. 8.8 million will be contingent upon going into production on La Preciosa, and it'll be 12 months after that. So we control the timeline of that. And then outside of the mineralized area, Coeur wanted some upside. If we make another major discovery there, that we would owe them 25 cents per ounce for reserves up to $50 million. And then also we gave them 1.25% net smelter on Agloria and Abundancia. These are the high-grade veins near the surface, which we're going to go after right away. Permitting will only take about 8 months, and we're going to do an optimization on a bigger operation. The plan is to grow the company to an intermediate stage producer in 5 years. So that's 8 to 10 million ounce a year producer. And you'll see where a peer group is valuing those companies coming up. Also, Coeur can, as long as they hold 10%, they can maintain their interests, and they can put a board member on our board, but they have elected not to at the moment. They have preemptive rights to maintain their ownership, and they've entered into a voting agreement, so they have to support the board as long as they own 5%. So strategic rationale, it elevates Avino's potential as a silver producer and developer, presents unique operational synergies due to La Preciosa's strategic location. It's 2 kilometers away from our boundary, so it's very, very close. It's highly accretive across key metrics. Positive results from metallurgical test work. So this deal was a year in the making. We signed the CA last year in September. So we ran our own metallurgical test work in our own mill. So it's not based on desktop studies. It's actual. We know it works. We generated 80% recoveries on silver and 60 on gold, which we think we can even improve on those. And it reduces the timeline to development, so this is accretive for both companies. They see that Avino's stock is undervalued, and they knew that this is going to really help boost the value of the shares of the company, which they'll be our largest shareholder with 14 million shares. Increases our Avino's silver resources and land position. The land position will grow by 7-fold. We go from 1,000 hectares to 7,000 hectares. So there's a lot of potential for exploration there. So here's the pro forma consolidated mineralized resources. So if you look at the top, you can see metal content. So actual silver is 45 million M&I and 13 inferred, or 76 million silver equivalent and 22 million inferred. And if you add that to Avino's current, you go down to the bottom down here, and you can see we have 143 million ounces of pure silver in the M&I category and 34 million inferred. And then if you look over to the end, that's where you get 189 million ounces of measured and indicated and another 46. So 235 million ounces of silver equivalent combined. Here you can see how it elevates us in the sector. So the junior comparables are at the top part up here. You can see we have 45 million ounces of M&I silver in the resource category, which is comparable to the group above. But then when you move over to M&I silver equivalent, we're at 118 million. So we're going up the ladder. And then enterprise value over resources, you're at $1.45. So we're extremely undervalued right now compared to our intermediate junior comparables. And then for a measured and indicated silver equivalent, 55 cents compared to the average $1.33. And this is simply because the mine has been down. We just recently reopened it in August. We were doing infrastructure upgrades, building a dry stack tailings storage facility, and automating the plant. And so we just came out with our Q3 earnings on Wednesday. Our cash costs are $6.75 per ounce of silver equivalent. All-in sustaining was 25, but that only represented 1 month of sales. We expect this to normalize in Q4. And down below, you can see what the pro forma will look like, and we're 15 times undervalued. So we're running out of time here. So here you can see measured and indicated where we stack up. With the resources that we have currently, we're down here, and that's simply because we weren't in operation up until August. So pro forma, we're going to have the most measured and indicated of any junior in this peer group. Measured and indicated silver equivalent, much the same story here. Enterprise value over measured and indicated. So again, we're undervalued. All these metrics show you that we're undervalued. So I'm running out of time here. Again, this slide shows you the same story, where we're heading. So in the next 5 years, we're planning to build, expand the mine so we can produce between 8 and 10 million ounces. So, whoops, sorry. Anyways, they're about $1 billion market caps where we're heading. So you're looking at it, 8 to 10 bagger from here in the next 5 years. And that's based on current pricing. Analysts that are covering us, they were all on the earnings call this week, so we've got good support from them. They've all revised their target prices up, except for a couple. They're waiting for the deal to close in Q1, but they're all north of $2 US. Market cap is 90 million US. We trade over 1 million shares a day and have great leverage to silver. Largest shareholder, I'm the largest shareholder of the company. Coeur will be when the deal closes. And the final slide, primary silver producer, one operation, one management team, and competitive costs, because we're not managing multiple mines, so we can stay lean and mean. 30,000 meter drill program underway right now. And so the leverage to silver, 235 million. This was evident on February 1st when the Reddit Army had the silver squeeze. We traded 129 million shares that day on New York with 90 million shares issued. We raised $17 million thanks to the Red Army that paid for this acquisition. It's going to help us grow into the next intermediate producer.